As the market ticks to all-time highs, in this video, we're going to take a step back. We're going to say what got us here and what do we need to see to go forward. Over at Stats Edge Trading, which you should definitely check out, we do a couple things when it comes to trading different styles, trading different philosophies on trading. And the reason we do this is because there's different systems that are going to work in different markets. We have been in a choppy mess for a long period of time here on the SPY. So if we go over here, you can see just a choppy and sloppy mess, back and forth, right? Breaking lows, ripping, breaking highs, ripping. Could we be doing the same thing here where we're just going to tick this all-time high and sell off? Absolutely. That's what we're going to try to figure out in this video, because during this environment, we've been trading a lot of mean reverting strategies. So TPR is a perfect example of something that's mean reverting. We're never buying junk. We're never buying, just absolute garbage that's hitting new lows. But this was one from our pullback system where gaps up on earnings, it comes in, we buy it here on this day, and I'm going to be selling it a little bit later. It's only a 4 or 5 day hold. Not very super interesting. ULCC is another one that I actually bought earlier today, and I'm going to be exiting that one probably on Monday with the systems rules. These are short little trades, and you can see how we are playing off the chop and the volatility. We're buying things as they go down. We're selling them as they pop back up. However, the other systems that we have are ones like this right here that happened in ANF, where we bought the breakout right here and then ended up exiting somewhere in this region on a trailing stop. This is like a year hold. This is the kind of trading that does really well when the market is just in a solid uptrend. And it's easier because you're just buying stuff and then you're just checking on it once a day. You're not trading as frequently. So it's what I like personally. I don't get to decide what happens. So we're going to look at this market where I've been focusing on, even though I trade all of the strategies all of the time, a little bit more focus, a little bit more capital on these mean reverting strategies because we've been chopping around. I'm seeing some things that may make me think that this is going to stick the landing this time. So let's go over some of those. First of all, big shout out to Ryan Diedrich on Twitter with Carson Research. You should definitely check out his work. This is kind of fun. I don't really consider this hugely quantitative, but just showing if you go back to 1950 and you look at what's happened on years that we've been up 3% going into Valentine's Day, which it is today. It's only been, you see only 2 red numbers there. So it's only been down 2 of those however many years, right? 75 almost. So a lot of good years. When we're up that much that we end up closing the year positive, that's interesting to me. Also, what I want to show is what's going on under the hood. We're finally seeing new leadership occur. So this particular chart is basically showing what's happening in year-to-date returns. The bigger the box, the larger the market cap. And the more red the box or the more green the box is year-to-date return. So we have these large red boxes saying that the biggest guys out there are actually still down on the year. Apple, as of the time I took this screenshot, down 3%, Microsoft down 3%. But look at all of the sea of green around this, showing that it's not those same big guys that led us through the markets last time that are leading us up this time. Which just goes to talk about a little bit about market mechanics, right? The S&P 500 is a basket of stocks. So for it to move higher as the biggest names in it are moving lower, just shows that there is this rotation under the hood. People are buying other things when it comes to what it is they're trading, not just the ones they were trading last time. So this is same thing, looking at all of the ETFs that I personally look at and how well they've been doing year to date. Psychedelics, China, ARK doing fantastically here. So these are not risk off sectors. It's not like the market went to a risk off mode and that's why Nvidia is not doing so well and that's why Tesla is not doing so well. It's just saying that we are rotating. People are taking money from X and then they're putting it into Y. And it's our job to figure out what that's going to be. I'm seeing this as very positive rotation. Now, what do I want to see going forward? Well, obviously, from a price point of view on the S&P 500, is us to stick the landing here. I think that's the most important thing. I think we need to watch this for another couple days, maybe all of next week, and see, can we stick the landing here? If we just sell back into the range, then it just ends up being this breakout, sell back, and I'll be more interested in this kind of mean reverting type strategies. Again, if we can stick the breakout, then again, I want to focus on those strategies. If you're a Stats Edge Pro member, Monday-ish is probably where I'm going to send you the list because it's a holiday for those who don't know. But yes, we need to see it stick the landing. The other thing under the hood we need to see is some catch up from some of these smaller sectors. Look, IWM gapping up today as recording this about halfway through Friday. We are down a little bit on the day, but zooming out, because this is all we care about, we're talking long term here, hasn't been able to even get through these highs. Right? Let's go to the SPY here, and these are the pre bear market, Russia, Ukraine war, whatever it's going to be. This high right here on the SPY, you can see we are well above even RSP, which is the equal weighted version of the S&P 500, which doesn't really care so much about the large cap names, but is really still the big guys. 500 of the big guys were well above that high. IWM, we just can't get going. MDY, which is our mid caps, get going a little bit, but not too much. So we need to see essentially more. We need to see more push from these smaller kind of names. That would be good for us as traders who are going to trade this, but it's also, again, more of that kind of rotation under the hood. Now, if we take a look at that chart again and say, here's what's going up, ARC is very interesting to me. So I want to hammer in on that for a second. You know, the ARC is a good example of trend following. If you got it on the way up, that's great. If you held it on the way back down, I feel bad for you, but maybe we're breaking out here. And this is just going to show that we are not entering a risk off mode where they're worried about the market. What we're doing is we're just rotating into different things. ARC isn't someone who generally invests in large cap companies. She's taking bets on XYZ company that's going to become hopefully a large cap company in the future. Starting to see a little bit of that starting to pop up. So keep your eye on the small caps. I think the small caps are definitely going to tell the tale. If we don't get participation in the small caps at some point, you think there's got to be some reversion happening there. Then last, I wanted to just talk about Bitcoin. I think the days of, and I can do a whole video about it. If you guys are interested, comment down below, hit me up on Twitter. I think the days of Bitcoin doubling and tripling and 10xing is completely over. On this particular coin, I still think it's a good risk on metric. And the fact that we are range bound, I don't like. I want to see a pop out of this range in order to kind of show us that, yes, okay, we are seeing this in traditional kind of tech stocks as well. So that's kind of the checklist we want to see. To go over it again, we want to see a breakout and a stick and hold of the landing on the S&P 500. That doesn't mean a day. That doesn't mean an hour. Right? It means a couple days. Let's be above here for a period of time and not retest that breakout. Let's see some participation in your smaller guys. We're seeing more participation across the board, but it's still centric in these large cap names. And then let's see other assets like crypto starting to coil up and starting to participate in the move as well. If we see that, then I think we could be doing that first chart that I sent that shows, hey, it's going to be a good year. If not, we could be more in this choppy, sloppy action. So if you need a trade plan for regardless of what we're gonna do, come check out Stats Edge Trading. I have all of the back tests going back 20 years on every single strategy we're running. I'm constantly building more new time frames, gonna start getting into crypto back testing, futures, the whole 9 yards. If you're interested in that, so you can have a trade plan delivered directly to your inbox every single week, coming over to statsedgetrading.com. I appreciate it very much. We have Monday off, so for an extra long time, get away from the screens.